Hello everyone, I'm Chanchal Agarwal from Easter Financiers, and today we are going to discuss interesting ideas for your offshore book. But before that, I'm a little hungry. Let me just Google for the nicest restaurants around my area. Perfect, found that. But let me just see the reviews on YouTube. Looks great. How far is it from my location? Okay, Google Map. Amazing. So let me just quickly email my boss that I'll be out of office. I got some urgent work to complete. Don't like this phone. Should I buy a new Android phone? Hello everyone, wondering what am I doing? Why am I behaving like this today? Look at this. We are so dependent on Google. Google is most accessible, most reliable. Almost our entire day, we spend 50 to 60% of our time on just Google and its services. So Google has lots of core business. Of course, web browsing is one of their business. Then you have Google Chrome, you have YouTube, you have the entire Android app, you have Google Map, you have now YouTube Music, Google Crowd. What am I missing? There is just so much that they have. But what if I tell you that instead of course, devoting your entire day on these apps and services, now you can actually sit and own a Google stock in India. First point, advertising business. Now, advertising business is the core for the entire company and generates about 80% of their revenue. This has grown by 19.1% over the last 10 years. In fact, they have a market share of 27.7%, much ahead of Meta and Amazon. So this is the core business. Of course, they had certain issues around pandemic, but now they are back to track. Second point, YouTube. We are also dependent on YouTube, right? To create these videos, to look for content. In fact, YouTube has 15 million subscribers and this is just increasing by the day. Look at this, there's this new gig economy, influencers coming in, and lot of people nowadays want to put content on YouTube, just like what I am doing, and reach out to people, reach out to their mind and convey what they want to tell in a short video. So we believe YouTube is something that is going to grow exponentially from here. This is just content on demand. You can just search whatever content you want to wish and yes, it is right there on your tab. Secondly, what YouTube is trying to do differently is they are coming up with these short video formats, something similar to what TikTok is doing, and they believe this will have explosive growth in the next coming years. Next one, cloud services. Now, all of us are so dependent on cloud services and Google has exactly known that and come up with this cloud services business. Of course, I understand they were the late entrants into this entire business and they still hold just 9% of the market share. This is still a loss-making unit for them, but they have substantially invested a lot of money into this business, which only is going to reap benefits from now on. If you see Amazon's cloud service business margins, they are really good and I'm sure Google will also catch up to it. That was largely on the business, how we are dependent on Google, all said and done, but investing is all about valuation. So let's look at the numbers around here. PEG ratio, which is price to earnings ratio for Google, is about 0.8% versus 1.2 and 3 for Meta and Amazon. Anything below 1 is undervalued. This is on the valuation. What is the return on capital? The return on capital has moved from 12% to as high as 20%. Of course, this is a post-pandemic year. There were a lot of advertising happening in the past year. But let's watch if this trend stays. I am with Google. Are you? Stay tuned because we are going to discuss lots of such interesting ideas. Do not forget to subscribe to our channel and visit www.easternfin.com if you need any further information. Stay tuned.